Okay, this is the March market update for Southeast Michigan, which is Oakland, Macomb, Livingston, Wayne, and St. Clair counties. So the trend for the market for February and the first part of March follows what we've been seeing actually since last December, in that mild weather seems to have helped the market quite a bit. Sales are up in all price ranges. We break them up to between 0 to 250, 250 to 500, and the luxury 500 and above. But all price ranges, sales are up. And listings are also up in terms of there are more listings to choose from, particularly in the over $250,000 market. There are more homes to choose from this year than last year. In the under 250 market, there's still a tight inventory. In fact, there are fewer homes to choose this year than there were a year ago. And even relatively speaking, although there are more homes to choose from, there have also been more sales. So, so the month's supply of inventory actually in all price categories is actually down, which gives you an idea that we're going into the spring with a healthier market. Now, the question that will be unanswered probably until maybe even as late as the end of May is that healthier feeling because of the good weather? So we sort of are carrying sales that we could have, that normally we would see in spring earlier into the year, or is the activity really stronger? And one of the things that we looked at is across the nation, look at national numbers. Typically, you don't really look at national trends because real estate is very local. But in terms of trying to figure out if there's an issue with how much of the weather in a mild winter has affected our business, we looked at the rest of the country, and looking at the rest of the country, foot traffic, for example, which is the number of people visiting open houses and showing properties, is actually down in January versus January of the year before, and December was slightly down December of the prior year as well. So that tells us, and we don't have February numbers yet, but that gives us an indicator that maybe nationally the market is strong, but not as strong as it was last year. So if that's the case, then we probably will see still as strong numbers when March finishes, and we'll still see strong numbers in April, but probably not as strong as we saw last year, last March and last April. One of the things to look at is we look at the number of new listings coming into the market and also new sales. And we sort of match those. There isn't a perfect match because every new buyer doesn't always buy the fresh listings, although actually 55% of all transactions are properties that have been on the market at least 30 days or less. So new buyers coming in the market do typically choose the fresh listings. But if we look at those by category, in the 0 to 250 price range, the sort of the majority of the market, it's about 1 to 1, and it's maybe a little stronger. So every new listing, there's a new sale. If you're in the 250 to 500, it's about 1.7 new listings for every new buyer, so getting close to 2. And if you're the $500,000 plus, it's about 3 new listings for every new buyer. So that's a good numbers when you're talking to someone who is going to sell their home in any of those price ranges. You get an idea of the velocity of the market and their expectation of activity by sort of those numbers. Month supply of inventory does the same thing. It gives another way of saying the same thing. But in general, we're seeing, again, the same trends we've been seeing. Nothing changed dramatically in the market. Probably looking forward for the balance of the year, one of the things that we're watching is just how healthy the auto industry will be. It seems like it's pretty much of a lock that we're going to have a steady year in terms of Southeast Michigan and Michigan in general in terms of employment and the health of the auto. But there are some things we're watching. We're watching the delinquency rate on auto loans. That has very little to do directly with real estate, and if someone turns their car in because of a problem, that's not going to affect home values directly. And the number of auto loans pales in comparison to the number of mortgages. So we're not talking about a major bubble like we saw with auto or with homes, but nonetheless, if those delinquencies carry up, and most of it's based on the fact that there's so many auto loans that are 72 months or longer, then that might slow auto production, and of course for us in Michigan that has a significant impact. So of all the things that we're watching, that's probably the most significant. Consumer confidence is okay, but consumer spending is slowing a little bit. So there's a few things out there that might cause us to a little bit of pause as to how strong probably 2016 2017 will be in terms of housing, that trickle-down effect. But so far, 2016, and certainly going into the spring, we'll have a good spring, maybe not as wild as last year, which is probably a good thing. So that's it. Thanks.